Hi, this is Kerry Artak with Wicked Stocks bringing you another video analysis. This one on Telus Corporation, symbol TU. I did record this video, by the way, on Tuesday, July 20th, 2021. If you're not familiar with Telus, just know that they are a wholly owned principal subsidiary of Telus Corporation, a Canadian national telecommunications company that provides a wide range of telecommunications products and services, including internet access, voice, entertainment, healthcare, video, and IPTV television. As far as Yahoo Finance is concerned, they have a market cap of about $38 billion, making them a large cap stock. And the video that I'm going to show you and the buy signal or the buy opportunity Wicked Stocks offers two forms of membership, free and premium. Free membership is exactly as it sounds. For no cost or obligation, you will receive one free stock video analysis a week, typically released on Mondays. And if you provide your name and email address, you'll receive an email from us each and every time a new free weekly video is ready for viewing. The second form of membership is premium and provides at least two stock videos every week and costs $24.95 a month. Just click on the premium membership link, fill out your payment information through our safe gateway portal, and you'll receive an email each and every time a new premium video is ready for viewing. Cancellation is allowed at any time. I should say that's at play right now. I would call this more of a mid to longer term. You could call it more of a kind of a midterm investment. Because this is not a fast moving stock, but I do think there's a case to be made for at least 10% gains and quite possibly in the order of 20% gains over the months ahead. 10% over the weeks ahead, 20% over the months ahead. Let me jump to the charts. You can see the full existence in terms of a tradable, publicly traded stock. That goes back to the very early 2000s on this chart. I'm going to zoom in a bit just to this area and show you that there is a channel structure that this stock settled above actually in early May. So we got the initial blast to the upside and put out a June high. And then we are now in the midst of falling back to a buy zone opportunity. I'm going to zoom in one more time and show you that channel structure, the base of which is 2137 this week, the week of Monday, July 19th. It rises ever so slightly to 2140 4 weeks later, less than a penny a week, to 2140 the week of Monday, August 16th. You can subtract them out, divide by 4, and you can know exactly where that buy zone channel formation is all the way through the rest of the year. This is an area that we came very close to testing this week. We've got a bit of a bounce now on Tuesday. That's a weekly chart. Remember, those are weekly bars. And so this is our base of support that can absorb selling, really through the rest of the year, because this is about a 5-year channel structure. So it's a longer term play. And let's take a look also at the fact that there is a nearer term channel structure supporting all this week at 2141. Just so you know, the nearer term channel that I'm showing here is at 2141. I'm not bothering to show you that exact location because I really think it blurs the distinction that this longer term horizontal channel structure is at 2137. You can buy 1% above that, which would put you into the, into around 2160, 2158 or so. That is the beginning of the zone of long-term support that can absorb selling through the rest of the year, and above which this rising channel structure, and this is months in the making, up above at 2524. This week rises at 2567. The week of August 16th. Subtract them out, divide by 4, and you'll know where that rising channel structure. I'm going to consider that an objective. There's a lot going on up there too, and I want you to hold that thought, if you will, and I'll come back to it. But there's a much longer term resistance area up there that I'm going to show you in a moment. But before I leave this chart, I want to show you that the June high was 2328. And so I think between now and the end of August, between now and the end of September, we can certainly rally back to retest that area. That's sort of the, kind of the 10% profit that I see possible here, holding above that 2137 formation, 2140 illustrated in this chart for the week of August 16th. So, a rally up into the 2320s, roughly a 10% gain, but ultimately the $25 area is anticipated over the months ahead. And if we close above 23.28 over the next month or two. And then we have a follow-through buying that should play out over the following month or two into the $25 area. So this is kind of a 3 to 5 month play. I guess I could frame it that way. That's why I'm calling it more midterm. It's more of a near to midterm investment as opposed to a long-term investment, or as opposed to a short-term pop to the upside. Sometimes we have signals that I'm anticipating to play out 20% within 2 to 3 weeks. That is not what this is. But if you're looking for a stock that is, there's a decent capitalization here, it is a very methodical trade, a lot of decent, normal, conventional ebb and flow. It's not an illiquid stock. This is a good one to have in your portfolio, into later year. And let me back up a little bit and show you that first chart, the full length of the existence of this stock, and you can see that the 25, there's another long-term formation. This one is much more significant than the 25.24 to 25.67 I showed earlier in this chart. So that area, this steep rising channel top that is about a year and a half or so in the making, it intersects with this 25.67. It's actually presently intersecting now. And that 25.67 rises to 25.72. That long-term channel top goes back, like about 20 years of trade. And so it's a significant area. I consider it a target above 21.37 that should play out over the next 3 to 5 months. And if tested, if we reach into the $25 and change area, that formation can absorb annual buying pressures when tested. At that point, I would highly recommend liquidating your long position and consider playing the short side if that's something you do, whether it's buying longer term out of the money puts or playing the short side in the stock itself. Now back to this chart here, the breakout chart as I call it, above 21.37. If we settle this week or any week back below that formation, 21.37, by a full 1% margin, in other words, another 22 cents to the downside this week, for instance, that would be around 21.15 or lower on Friday's close. That would be an indication that this is not a stock worth owning as you continue into later year. And I would recommend then, if you were to buy, the 21.30s, 40s, or 50s in anticipation of higher trade, and we were to close 21.15 or lower at the end of the week, or below that formation by a 1% margin, that is your sign that is a bit of a dog right now. I'm not saying it'll sell off significantly. It may, but I think it will take its time into later year and probably not move much higher. And so I think that that's really all that needs to be said. I'll leave you with this image, which is to say, holding above the 21.37 to 21.40 region, we should reach into the $25 area, say by the end of the year perhaps. And if we can get up and over, say, that June 23.28 high, then we're looking at more like another couple of months and we should reach that target. And I think that that's all that needs to be said for this particular Wicked Stocks video analysis on Telus Corporation.